Financial health refers to the state of one's personal financial affairs. Financial health has many dimensions, including the amount of savings you have, how much you save for retirement, and how much of your income you spend on fixed or non-discretionary expenses. Understanding financial health. Although financial experts have developed rough guidelines for each indicator of financial health, each person's situation is unique. As a result, it is worthwhile to devote time to creating your own financial plan, to ensure that you are on track to meet your objectives and that you are not putting yourself in undue financial jeopardy if the unexpected occurs. Measure your financial health. To get a better understanding of your financial health, ask yourself a few key questions. Consider this a financial health self-assessment. How well prepared are you for unforeseen events? Do you have a rainy day fund? How much money do you have? Is it favorable or unfavorable? Do you have all of the necessities in life? What about the things you desire? What percentage of your debt, such as credit cards, do you consider to be high interest? Is it greater than 50%? Do you actively save for your retirement? Do you believe you're on track to meet your long-term objective? Do you have adequate health and life insurance coverage? How financial health is determined. A person's financial health can be measured in a variety of ways. A person's savings and net worth represent the monetary resources available to them for current or future use. Credit cards, mortgages, and auto and student loans can all have an impact on these. Financial health is not a fixed number. It varies according to an individual's liquidity and assets, as well as the price of goods and services. A person's salary, for example, may remain constant while the costs of gasoline, food, mortgages, and college tuition rise. Regardless of their initial financial health, the individual may lose ground and lapse into decline if they do not keep pace with rising goods costs. A steady flow of income, rare changes in expenses, strong returns on investments made, and a cash balance that is growing and will continue to grow are all signs of good financial health. Improving your financial health. To improve your financial situation, you must first take a hard, realistic look at where you are now. Determine your net worth and where you stand. This includes everything you own, including retirement accounts, vehicles, and other assets, as well as any and all debts. Budgeting. Then you must make a budget. It's not enough to plan for where you'll be spending with your budget. You also need to look closely at where you're already spending. Are there any areas where you could save money? Subscriptions that you don't really need, like cable? It's advantageous to know what your needs are versus what your wants are. To assist with budgeting, use spreadsheets or mobile apps. Alternatively, you can use the tried and true envelope method, in which you create an envelope for each budget item, such as groceries, and keep the allocated cash in the appropriate envelope. Sticking to your budget regardless of whether you start making more money or bringing in more income is one of the most important aspects of budgeting and maintaining your financial health. Lifestyle creep, or spending more money as you make more money, is bad for your financial health. Emergency fund. Creating an emergency fund can significantly improve your financial situation. The fund is intended to be money saved and easily accessible for emergencies such as car repairs or job loss. Your energy fund should have 3 to 6 months worth of living expenses in it. Debt. Pay off your debts. Choose between the avalanche and snowball methods. The avalanche method recommends paying as much as possible toward the debt with the highest interest rate while paying the bare minimum on all others. Meanwhile, the snowball suggests starting with the smallest debt balance and working your way up to the largest debt. Each has advantages and disadvantages. Choose the one that works best for your debt load and money management preferences. Rules and tips for financial health. When it comes to effective personal finance, it's not always easy to keep your financial health in tip-top shape. We become preoccupied with living our lives. However, here are a few quick rules and tips to help you improve or maintain your financial health. Automate your bill pay and savings. That is, set up automatic transfers to a savings account and auto-pay all your bills. Always look for free checking and free accounts. Shop around for insurance, cable, or other recurring expenses. This includes if you already have these items. Use a budgeting method, such as 50-30-20, which says you should be spending 50% on needs, 30% on wants, and saving 20% of your income. This 20% could include debt reduction if you have high interest debts. Try to limit spending on housing, rent or mortgage to not more than 40% of your income. Invest early and often. That is, try to put 10 to 15% of your income directly into a retirement account. Business financial health. Comparable factors can be used to assess a company's viability as a going concern by gauging its financial health. For example, if a company has revenue and cash in the bank but is investing in new production equipment, office space, new hires, and other business services, it may raise concerns about the company's long-term financial health and viability. If more money is spent on things that don't contribute to the overall stability and potential growth of the business, it can lead to a decline that makes it difficult to pay regular expenses like utilities and employee salaries. This may force businesses to freeze or cut salaries in order to remain competitive.